Alrighty, I'd like to welcome everyone to the Hurley Investments Financial Services Commentary on Tuesday, the 6th of February, 2018. Obviously, we just went through another flash crash, and I'm just going to point a couple things out. I am welcome to hear all the comments, and I will get all your questions answered tonight. But it was pretty interesting because not too long ago, I had a friend come out and said, I'm teaching a bunch of 15-year-olds. I'm teaching a bunch of people that don't know what 9/11 is. Kevin, it's like for me and you, we heard about the Vietnam War, but we never understood the Vietnam War, even though my dad was a two-tour vet or what have you. But the short answer, he said, how do you describe 9/11 to someone that's never been there? Well, in all honesty, we went through a bunch of first-time things, such as a flash crash. How do you describe to someone on a flash crash, hey, don't go put protection on because it's going to cost you 10 times more than it should. And tomorrow, if we get a bounce, it's only going to be worth half of what you bought it for. How do you go through with some people and say, no, don't start selling into the weakness because you're just going to perpetuate the rundown? How do you help someone from having Bitcoin to straight long calls book like a $34,000 loss on a $100,000 portfolio? Or even more important, someone that sold, took a big loss, added protection when the market was down 1,500 points, paying way too much, had to bounce back up to 800 or 700, sold it off again, and make those day trading knee-jerk reactions. It's those type of questions that I have been dealing with for the past 4 days. And it's those questions that I want to go over with you tonight, and to a certain degree, somewhat help you understand what I see and what makes me be able to survive a flash crash without having those feelings of fear and greed. And for this case, it's both, just well up inside of me and make plain and simple, stupid, dumb-ass amateur mistakes. To bring it up to start off with, someone tell me, Keeve, you're not allowed to, but we've got 19 other people here. I told you to be a busy class. What's happening tonight and why? What's going on in our market? What caused this? What's going on? Someone tell me your best thoughts or processes. Interest rates. So, Dave, I want to know really quickly, describe interest rates. Interest rates, how does that cause a flash crash? We have the bond yield. So, Maud, I'm going to ask you the same thing. Give me more details there. And manipulation. George, I would normally jump on the manipulation bandwagon, but I'm not going to tonight. Interest rates going faster than expected. And then we have another. Interest rates are going higher, so it makes bond yields more attractive. So pretty interesting. All of a sudden, we have this magic thought that if bond yields get up to 3.25, people are going to rush and throw all their money into a guaranteed 3%. So we've got 19 of you here tonight. Let me ask this question. If you could get a guaranteed 3%, would you throw all of your money? Or in a 60-40, would you go throw 40% of your money into bonds? Maud, George, Dave, Lance, Henry, Mary. Maud had a heck no. George is pretty good. No. So out of curiosity, the talking heads have pushed bond yields. Is that, or could that truly be what's happening right now? Everyone here just answered no, stupid. Okay, you know, that's not the smartest thing to do. Okay, Kevin, that was dumb. It's just what we heard. Okay, maybe the volatility issue. So obviously it's not really so rates go up higher, right? What was it? Manipulation. George, it's okay if I pick on you. And I know Lance, if you can mention or comment on this, let's talk this up. Trying to make Trump look bad. Come on. Well, you know, he did set himself up that the stock market, quote unquote, is his measuring stick on how well as a president that he's done. But really, do you think there's enough money in the Democratic Party or enough pull for people to bail out of their positions to make Trump look bad? George says yes. So obviously you think Soros is behind it. But wouldn't you think someone like a Buffett would jump on that black pool trading, or that big jump as a bet if it would just came in one foul swoop? Too many billionaires, too much big money in there to counteract that, George. Possible, yes. I'll give you possible, but not probable, not likely, not something that you could really explain it. Lance, you made the comment, but people really hate Trump. But so there's enough retail people or a whale that's going to try to make a blip in the market to make Trump look bad, knowing it's going to be bought eventually? Best comment I've heard yet. The Ruskies did it. The Russians did it. Oh, that's someone just made my night tonight. All right. Would you guys mind if I proposed a more logical scenario or described a more logical scenario? All right. There's a couple that you just said go ahead. Yes. Okay. We've gone, what, 2 years, 19 months, something ridiculous, without a 3% correction or pullback. Back in the day, I used to hear people tell me, hey, you need a correction, you need a pullback before you can go higher. And I'll be honest with you, I used to sit there and go, really? Really? We need a correction. We need a pullback. You're telling me pullbacks, can't spell, pullbacks and corrections are needed in the market, along with some volatility. Here we've gone 3 years with no major volatility. And I'll be honest with you, if you asked me any time in my life before tonight or before this week, I would have told you something along the lines of, take off, you hoser. What do you know? Really? Stocks, people have to be frightened out and they have to sell. That's needed, huh? Bogus BS. Don't buy it. But when you have a market that moves 1,000 points in a week, 19% in 9 months, with the bulk of that coming here in the last 2 months, you get a complication of orders. You get not enough time for individuals, institutions. Good thing I can spell again. Institutions dark pools, funds. You don't get enough time for them to start to spread out stop losses. Sell orders. Profit taking, dark pool, block orders. And when you move so fast, you're kind of resetting to the most recent level of support. And when you move so fast to the upside, you get a bunch of people raising those stop losses, those sell orders, those profit orders. And all of a sudden, you break 27,000 and you get a bit of a sell-off. And you have all these orders stacked up, so you see a 500-point down day. And then all of a sudden you hit 26,000 where you got a bunch more stacked up and you have a 600-point down day. And then you break 25,000, a huge round number, a first time can't believe you're going to be there. One that took some time to get to, where you have a ton of sell orders stacked up. And boom, you fall down from 25,000 and test literally 24,240 in about 3 minutes. And when you go to that point, all of a sudden you're in trouble. Market makers can't keep up. As you have people that have stop losses, you see, because of the flood of orders that are going in, you don't get the uptick to trigger a registered price, and your stop loss gaps through. And all of a sudden you have hundreds of thousands of stop orders trying to register an uptick or two upticks to get filled at a price, and you have a landslide in your market till market makers can catch up. I'm going to tell you the drop was purely technical with pre-planned orders not being able to be filled while market makers didn't have the time to, and I'm going to quote that, catch up. Well, Kevin, how can you be so sure? And I'll be honest with you, I'm not. But I did live through a flash crash in 2008. I did make the mistake of selling into and trying to buy protection in the previous flash crash. I do know how institutions work and how they pre-place their orders for selling and for buying. And they didn't have levels of support to use to place those buy orders except around that 24,000 mark. Over 3,200 less on the Dow. It was brutal. It was a brutal sell-off. I know two people that have saved up over the last 8 years. They think they understood the market. They each had $100,000, $150,000. They were going to day trade their way into 60,000 years. They didn't have to work anymore. Guess who's going to be going back to the job that they just quit in December, and they didn't make it 5 weeks in the stock market? Now, I don't want to tell you, oh, I was profitable on these days, and I wasn't. Yesterday, 4.25 down. I was down about 1.75%. Friday, 600 down, and I made up half of it. What I didn't do so well are spread trades for some people. Ford's not treating me extremely nice. AOBC, what a drag that stupid thing has been. Well, did you take a hit in your SPY covered called indexes? Of course I did. But we made up something on the way down. And if anyone can give me a thought process here, what happened today? Is today a reversal, or can it be called something else? Is today a reversal, or can it be called something else? A bounce, that's half of it, Mod. What else can you say? Is it a reversal? A retracement? I want to go off a bounce, though. You know what I think is going to happen in the next couple of days? I could see another 1,000 to 1,600 points burning off to the downside. I could tell you this is our dead cat bounce day. We truly haven't had a flush out, even though you can take a peek and say, well, Kevin, man, that's some pretty big volume. Really? The volume I would have expected for a flush out usually sits double your most recent highest peak for a purchase or a sell. I could have told you on Friday it wasn't going to end. Things can be different this time around. Could it be we're just going on a technical bounce again, right? But again, I would have told you on Friday, hey, we're not done Friday because typically the sell-offs don't end on a Friday. Typically our rush down today or our rush up today is a dead cat bounce because we haven't tested the 200-day. Not only that, we came up to the 50-day and we didn't break it today. Who just made that comment? Mod and Lance. Lance, Kevin, I don't think it was enough just yet. We probably have more downside movement to go. Mod, I think it's going to take more downside to get people really scared. Both of those. Great comment. In fact, Mod, I really like yours. The fear isn't in the market. It's just a free-for-all right now. We didn't stop at a support level, although you could say around number 24, it looks like we did breach that. I don't know. I'll be the first one to tell you. I can't outguess what the market's going to do, but it would not surprise me if we headed back down. To a certain degree, it wouldn't surprise me if we headed back up. But if you pull out a long-term chart, we would have hit a trend line on the lower level. So technically speaking, the trend is intact. We still have a channel to the upside for our bullish market. David, does this mean that money is going to pour back in? I don't know. We had some funds today, like the VIX, the inverse ETF trading that was halted, and some funds going out of business. Some of the weighted, indexed, and inversed ETFs on the VIX, on the VXX, on the VXN are going to be done away with. Interesting, yesterday, did we fall intraday 5% yesterday? Of course we did. Kind of simple math, right? If we were down 4.25 on the Dow, and we're only down 1,175 points, if we were down over 1,600, of course we did. So let me ask you guys a question. Where the heck were these circuit breakers that are supposed to be tripped if you have a 5% down in any certain equity, in an index? We've got these protections in place. Plain and simple English, Trump style. Where the hell were they yesterday? Clinton, what is I'm sorry, George, you got me. That's funny. That's funny. Yeah. All these things that are in place, where were they? I can tell you this. Straight long put or collar protection worked best. Bear put, spreads, and short-term options sucked. Long-term leap options and trying to take advantage of volatility worked as well. Let me just give an example. You know what? Where were the circuit breakers? They were nowhere to be found. In all honesty, it's my belief that circuit breakers are used per big money that requests it. Since it's not an automatic, you're toast. Guys, I watched someone take a stop loss and lose over 10% more than where that stop loss was marked at. They got hosed. You couldn't register an uptick to trigger a selling price to get an order in on a stop loss. Is it because we have gone up so much the percentages are less? No, it's not. The percentage was well over 5% yesterday. In fact, it was closer to 7.5%. Where were the circuit breakers to allow market makers to catch up? Weren't triggered. Should have been. Weren't triggered. There's my faith in our government and our circuit breakers. Worthless. Worthless, and you have enough money to request them to be triggered. So what I mean of taking advantage of volatility, I'm going to go ahead and I'm going to throw something in here. And let's see what we can find. Let's do, all right. So here is some long put protection on Ford. What position do I have here? Obama position? Long puts, there you go. I had the right to sell Ford at $12. It cost me 46 cents out of a limit of 47. It filled at 46. Then to create a bear put, because Ford had fallen so much already, and it had already pre-announced not stellar earnings, I did one of these. What I do? I create a spread, a bear put spread, right? I'm now obligated to buy at 11. What's my cost basis, guys? What's my cost basis? 27 cents. What's the maximum reward I could get in my bear put? $83 mod? 73 cents, right? Difference in two strike prices. The most I should be able to sell that for is 73 cents on options expiration, and or probably something below that because there's still time value, right? Maybe the day of I can sell it for 68, which gives me about 5 cents left, to maybe 70 cents, a couple cents if I do it 15 minutes before the market closes, right? We'll still have some time value. Maximum reward, 73 cents. Well, I got 13 cents in a dividend that lowered my strike prices by 13 cents. And I sold them for ta-da. So how much did I get filled for? $0.86. Pretty cool. Go volatility, right? got filled for 86 cents or 13 cents above the max reward. And I got notice how they're now changed. My prices are now changed down 13 cents. Pretty neat, huh? So, and I got 13 cents for a dividend. Or I got the whole $1 in my spread after spending 27 cents. Pretty cool. Ready for the but? But my stock fell from $12 down to $10.31 yesterday when I took off protection. Left it overnight without protection, a little bit risky, right? I took off protection, and today finished at, I'm pretty sure it finished at 10.71. Let's take a quick peek. Let's take a quick peek. And it looks like Ford finished at 10.76. So technically speaking, I'm still down 24 cents out of a $2 move to the downside. Some accounts did much better than others, but every account I can live with the drops that occurred. The question is if they can. My risk tolerance is different than other people's. Usually if they had spreads or straight long calls, we could have seen a total of a 5% drop in this 10% down. If it was more under just caller trades, I'm going to say with some of the bigger accounts, we did better in. Some of the smaller accounts we didn't do quite as good in. Part of that is based on what we have, such as Ford. Some of it, though, it's just pure dumb luck and some of the spreads that we had in place. Accounts with AOBC, I'm really struggling with putting a short-term, nicer credit covered call and just getting out of it. Just moving, getting out of it, placing some out of the money, maybe some 1250 leap long calls to make up some movement to the upside and just being done with it. There are some stocks that are out of favor right now. AOBC would be one of them. SYXY or SXVY lost 93%. Huge downward movement. In fact, let me tell you what that is exactly. It is where are you? It is SVXY. Stephen Victor X-ray yellow. Huge beat down, ridiculous beat down. Wouldn't surprise me if they end up closing one of those wacky funds, quote unquote, as Icon said. Ugly. It was rough. It was extremely rough. And some people lost in that 30 to 45% range. Horrible. A lot of people that were in the VIX short-term exchange traded note, the velocity shares, the XIV, it blew up overnight. Credit Suisse is going to end trading for the XIV on February 20th. It was difficult. And it ruined some people, but probably not enough to stop the downward slide. Means one of two things. It probably means, for all intents and purposes, we will probably see a bounce back down the next couple days. And again, technically speaking, if I looked at a chart, we probably need to go and test the bearish oversold bounce and test the 22,743 200-day simple moving average range. We probably, on the S&P that is now bearish and has an oversold bounce, need to test the 2535 200-day simple moving average. And if I even go to the VIX, same exact thing, bearish and had an oversold bounce, probably needs to test 65.43. Even though there's no support, probably closer to 64.60 when it's all said and done. But we still need these bounces. We still need these sell-offs to flush the market out of those areas. If you were to ask me where we're going to finish this week, I want to be wrong, but I would most definitely tell you lower. I think we'll finish out this week with some pretty bad days tomorrow and Thursday, and then start our climb back up on Friday. And it'll be a much slower climb because we're historically going through February, which is not one of the better months. If you're to ask me where we're going to end February, it won't be horrific like it is right now, but I would be okay with being down 3.5%. I don't want the markets to be down 3.5%, but I could see that might be where we flush stuff out and we have a bit of a comeback, where we start to move back to a more normal registered market. I guess that's all I can really say. That's not what I'm looking to say. A more even keel paced, where we have a little bit of uncertainty, a little bit of scarcity. That's not the word I'm looking for either. A little bit of fear in our market where people just don't throw their money in thinking it's everyone makes money, because everyone doesn't make money. Again, I know of 3 people, 2 that thought they were going to day trade or trade for a living, that have to go back to their jobs and say, I screwed up. Is there a spot still available for me? Earnings this week. Disney reports today. They beat on the top line, I believe. Beat on the bottom line, missed on the top line. So their earnings per share came in significantly higher. Their revenue came in a little bit lower, but Iger said the right things. It would be interesting to see if we have some follow through on Disney, because Disney has been one that has not been loved. But after hours, Disney's at $3.11. Maybe Disney can go back and recapture that that 122 mark. Would be nice to see. NVIDIA reports on a Thursday with Cardinal Health, Kellogg's, PM, which is Philip Morris. Yum Brands on Thursday. Tesla's on Wednesday. ICE is on Wednesday. Humana. CBOE on Friday. ICE is on Wednesday. General Motors reported today. I mean, none of these are market movers or bellwethers, but it is what it is. You know, it's nothing but a thing. Economic reports. We had ISM services at 59.9 versus 56.7. So on Monday, our ISM came in better than expected, right? I can go ahead and put this in here really quickly. ISM services came in at 59.9 versus an estimated 56.7. And I'm going to use this in a second, but today trade balance negative 53.1 billion versus 52.3. Jolts a little bit higher, 5.881 versus 5.879. Pretty tame, but nothing internationally is going to move us. I think we are looking at our market movers are going to be the correction. And if it is over, we'll move the markets from here on out. I would not pay any attention to the garbage you're hearing on interest rates. I did want to go over to show some of the things and how it went. Straight long calls on Apple, feel protected, making money on them. Zions Bank a week ago, I showed you, hey, a stock that's trading at $59.93 had some in the money or close to the money long-term July covered calls. Well, it looks like I lost on my stock 53.93 minus 52.52. Looks like I lost on the stock $1.41. But on the short calls, 340 minus 282. But I made 58 cents on the way down. 58 divided by 1.41. I made 41% of the downward movement on Zions Bank. Because if I also take the 141 divide it by the $54 roughly that it was trading, I lost 2.6%. Out of that 2.6%, I made 40% of that up. I'm down, 1.5% roughly. I can live with that. And what we just suffered, 10% down at one point, that is a successful trade for me. Doesn't mean that the accounts look beautiful. I can live with that. Disney, in all honesty, I moved 60 contracts. I moved 69 contracts to the 105 strike. Capturing profit. And others that haven't been in as long as others, I guess is the best way to say it, that didn't have enough profit, I kept the long puts at 110. That also is because on some of those that didn't have enough profits, so to speak, or as much, I was having an extremely hard time with getting those positions filled. Baidu. I had some of Baidu last week that was just long puts. I had some that were in bear put spreads. They all had that 250, but I also added some bear puts, and I rolled it from 230 down to 220. Pretty interesting because I've got about $20 of profit right here. And on some of these, I've got about a $2 loss, and I've got about a $1 loss. But I'm in a bear put, and I'm going to be honest with you, I'm probably going to move the whole thing down to 230 for my longs and 200s for my shorts to prepare for earnings coming up. I want to capture some of that profit, especially since Baidu has very little to do with the U.S. I found an interesting article, The Only Way to Trade Ford, and if this is a great position, I would suggest you read through this, but honestly, Ford by evaluation point is too cheap. It's ridiculously cheap. It is unbelievably cheap. But it might be too cheap to be any good, meaning if you go through your ratios, a P ratio of 5.6 is extremely cheap for a company that's only trading at 0.27 times earnings with 5 times free cash flow. By every metric, this should be a screaming buy, except for the metric that is, what's wrong? Why would anyone sell a stock that trades 5 times earnings? Isn't that like selling a winning lottery ticket? Fundamentally, mathematically, this company is a screaming ridiculous buy. Talk about manipulation. I think it sucks that the government and that maybe Wall Street said, hey, we're not going to make money off of Ford because they told us to take a hike. They told us we're not interested. Car sales look bad. Yes. When you go against the greatest 1 month of last year of January, the best month in sales for the whole year, you're probably going to struggle the next January when you go on a month over month, year over year basis. It was horrible. Their cars didn't sell as well. Fleet sales of cars were down 12%. But Ford's not necessarily known for their cars. They're known for their trucks. And their trucks, on the other hand, were really pretty good. Their trucks were up year over year. Their truck sales were up more than 6% than 2016. Pretty good. Macro is a positive. If you look at Ford, people are still buying cars. In fact, if you go through and look at the insurance numbers, people just now are getting paid off for Hurricane Harvey, was it, that hit Houston last year? A lot of money. Oh my gosh, you know what? There's an ISM correlation. Look at the rise up right here without that correlation really taking hold yet like it has been in the past. The ISM correlation says these guys have ridiculous amounts to move. They can double in value. Going on through, how to trade Ford, basically they make a case for the bear side. Their issues, their problems. The reason why you're in Ford is for the 5.6% dividend. That's why you'd stay there. Interesting article on the biggest tax cuts. Could be the demise of the bull market. Again, that could be manipulation, people not understanding how that's going to help corporate America. And interesting article from Howard Marks about the belief that it's different this time. Everyone says it, hey, it's different this time, but mathematically, it is different this time. With that said, what questions do you guys have? What questions can I answer for you that maybe I haven't hit today, but hoping that today would be positive for you to see where we're going to go from here? Go ahead and type your questions in. And is that David? Lance? What are my thoughts on Apple? Apple is the best U.S. company to own fundamentally. And yes, they could be up to 190 to 200 by the end of March. I love Apple. Yes, I've got an advisor that has long puts on them at 180. I've got some long puts at 175, 175, I think is where mine are at. Couple at 170. Yes, I'm looking to cash in that profit. I'm not looking to do it anytime soon. As I look at futures, they're not horrible, but as I just took a peek at futures, the futures right now tell me they're down. Dow's down 25, S&P's down 6, NASDAQ's down 7. I'm ready for another couple 100-point down day tomorrow. So I haven't been ready to take off protection on everything. Did I take it off on Ford? Yes, it hit a ridiculous low where it bounced last time for 400 basis points higher, from 10.20 almost up to 14 and a bit. Because I can do that for Ford doesn't mean I'm going to do that for Apple or Visa. I had someone ask me today, well, Kevin, you're ready to take stuff off of Apple, but why won't you be ready to take it off of Visa? Or vice versa. Look at a chart. Look at a chart. The chart's going to tell you if it's a good idea or a bad idea. What do I mean by that? Hey, if I looked at Visa, Visa is almost to a bullish sign on the RSI. Now, it won't be on its crossovers. It won't be on its MACD. But Visa had a killer earnings report. It's a screaming buy. My justification would be right here. Take protection off. Right there is my precursor to Visa going higher. So you take protection off of Visa, but you wouldn't take it off of Apple? Darn right. Apple just came off of an oversold. It's not challenging the 50-day. In fact, it might have to go back down because it doesn't have a level of support that it bounced off. Well, did bounce to 155, so I could take that back. But I don't feel as comfortable with having protection off of Apple as I do Visa. More people seem to take profits off of Apple than Visa. At the same time, yes, I could see a violent bounce back on Apple as it shook some people out, as you're getting a deal, as they're obviously going to buy their shares up. So there is a put on both Apple and Visa. Visa adding 20, what is it, $20 billion to buy more shares, and Lord only knows how much Apple has. There's puts in place for both of them, but I'd be more comfortable taking protection off of Visa than Apple. Yet I do think Apple is the best U.S. company to own fundamentally. And yes, they could very easily be at that 190, more like the 190, not necessarily the 200 by the end of March. Good question, Lance. Glad I could answer that. Any other questions, guys? I know this will be in for someone. We both have positions on here. I got talked into something I'm a little uncomfortable with. The IBB. Kevin, what are you doing trading the NASDAQ biotechnology? Well, I like it. I like it, and I've got a 106, 113.33. So I think it's a 106.66 and a 113.33 bull call in February. Not only that, I'm looking to add positions because in one day, bounced off of the 200. Maybe it's March. I think I got it in March. I'm sorry. Bounced off of the 200 and cleared the 50, where if I get a bit of an update tomorrow, I'm going to add to this position. I'm going to throw a couple more contracts where I already have 10 contracts on for both me and someone else that I manage money for. I got introduced to an ETF that pays a dividend and that somewhat excites me. It only has to get back up to that 113 for me to make pretty close to a 100% return when it is a past level of support. Not only that, but it has the gap. Very easily next run up to 113, I'm going to sell out on some of my portions to make a profit. But it's a great position that I see for a new trade, or for me to add to a trade. Not the best thing to do to add to a trade, especially if it's losing money right now. But this is one where I think I paid $280 and I almost had 100% return. Got a little greedy. Got creamed over a couple days. Nice to see it going back up. This could be 100% return on a spread trade, and I do have all the way out to March to get to it. Daniel, nice to see you. Thanks for joining us, but we are at the tail end right now, unfortunately. Any other questions you guys have that I can answer for on what's happened today? And Daniel, again, started an hour ago, 6 o'clock Mountain Standard Time, but I'm glad you finally made it. I will get this posted out there for you so you guys can listen to what's been said. No worries. I'm glad you made it. Look for a recorded version to come your way. Any other questions other than Lance's question here? Really? You know what? It's just I feel good how I survived the drop. And in general, yeah, I'm down about 3.25% from the highs where the market's off, 9% or 10% at one point in time. No, I'm not making every penny on the way down. but I'm making enough to make me comfortable to not get scared out with my money and with others. Guys, if there are no questions, I'm going to thank you for being here tonight. I look forward to seeing you next week. Check your emails next week. I may be doing a little bit of traveling, which means I'm going to have to pre-record something and send you out a link to have it available for you. I usually will send it to all my registered individuals. I'm trying to stall to see if any other questions come across, but it looks like no other questions are coming across. So guys, I appreciate your time being here tonight. I hope this was helpful to have you see and understand what was happening in our market today. Any questions at all on describing what moved our markets and why things were moving the way they were? I think I kind of did it pretty good. All right, guys. Hey, you guys have a great evening. I look forward to seeing you next week, although do check your emails before. I'll get this posted relatively quickly so you guys have access to it. Guys, have a wonderful evening, and I will talk to you soon. Bye-bye.